President Schlegel, thank you so much for speaking to Bloomberg. Now, when you look at inflation, we thought that it maybe turned a corner. How do you see all these trade tensions? Is it, is it going to be discouraging news for inflation?
First, on inflation in Switzerland, inflation is now at 0.1%, which is close to the bottom of the target range that we have from 0 to 2%. So we decided in December to leave policy unchanged at 0%, and with this, monetary policy is appropriate.
But how confident are you that the path of inflation has finally turned a corner?
So we expect inflation to go higher during this year and also next year. But with the current monetary conditions, the monetary policy is appropriate.
I mean, you've had to downgrade your inflation forecast for the fourth quarter and hardly had any price growth then. So what happens in the coming quarters?
So we expect inflation to go up according to our medium-term forecast. And this is basically good news because inflation is then in the range of price stability for the whole forecast horizon.
So is the reading for January likely to be subdued because of electricity prices?
Oh, I cannot make a forecast now on a single month. But it's well possible this year that we will have negative prints. But this is not a problem for the Swiss National Bank because our target is medium-term inflation, and the medium-term inflation is within the range of price stability.
So you could have negative readings on certain months, but as long as the trend isn't always down, you don't worry about it?
Yes, because our goal is medium-term, and therefore single months or a few months this year with negative prints are not a problem.
What does it mean for interest rates? So you seem to have changed your bias to rates, neither cutting nor hiking.
So interest rates are at zero right now, and we mentioned several times at the Swiss National Bank that going negative, there the bar is set higher for negative interest rates, because negative interest rates, there the transmission of monetary policy is a little bit a different one.
So is it safe to say that you've actually changed your bias to neither cutting nor hiking? Is that a fair interpretation of your policy going forward?
We always look at the moment, and monetary conditions are appropriate at the moment.
But it wouldn't be wrong to look at it this way.
You mentioned the summary that we published, and this summary that is just like representing the discussions that we had on our monetary policy meeting in December.
President Schlegel, a number of observers say that at the current junction, it would actually take something quite unexpected, maybe an unexpected shock for the S&B to cut rates. Do you agree?
Oh, we always talk about monetary policy at our monetary policy meetings, and therefore I cannot make a forecast on how we would react to shocks. But of course, if there would be a big shock, the S&B could react.
What would it take, actually, to see a cut now? Like, how much of a deviation from the current situation would you have to see?
Our mandate is price stability. And if price stability in the medium term would no longer be warranted, this would be a reason to adjust monetary policy.
What are you monitoring to see where the shock could come from?
So the main risk at the moment is, of course, the world economy, is geopolitics. And as you know, the Swiss franc is a safe haven. Whenever there is a crisis in the world, the Swiss franc appreciates. And this has also an effect on inflation in Switzerland. And this could, theoretically, or also in practice, be the case that then price stability would not be warranted anymore, and then the Swiss National Bank would act.
But would it be more interest rates in the US? Would it be growth in Europe or tariff shocks?
Oh, this really depends. It's difficult to say. If there's a shock, we have to analyze it and then take measures.
But what do you worry about the most, given all of the uncertainty? And we're here in Davos, and I feel like all of the uncertainty really distilled in these 3 days.
So at the moment, it really feels like the geopolitical risks are now the biggest. And these can have a direct impact, of course, on Switzerland, on the economy in Switzerland, inflation in Switzerland, and also, of course, on the exchange rate.
How much do you worry about central bank independence in the US?
Central bank independence is very important. For a central bank to fulfill its mandate, it needs to be independent. Without independent, history clearly showed that it's very difficult to achieve the goal. I can also say there was a statement last week about central bank independence. I also signed this because I think it's a very important concept, this independence. And also have the highest regard for Jay Powell. I think he's really a dedicated central banker. He's dedicated to his mandate.
If the president continues to attack Jay Powell, could we actually see shockwaves in markets?
Generally, I can say that the Fed is very important for the global economy, and of course also for global financial stability. This is what I can say about this.
President Schlegel, did the strength of the Swiss franc surprise you this year?
I mean, if you look at the Swiss franc exchange rate in the last few days, it appreciated a little bit, but over the long run now, a few months back, the exchange rate was more or less stable.
But actually, it's also reached records against the euro and the dollar, and the Swiss National Bank hasn't done anything about it. So, is it fair to assume that you don't actually see it as a big concern, the level of the Swiss franc?
So, if necessary, we are ready to intervene in the FX market. But of course, we always look at the situation as a whole, monetary conditions, and also at the exchange rate as a whole. And the real exchange rate actually has been rather stable in the last months.
But is there a level that would make you nervous?
I cannot comment on this.
Is there a trend that would make you nervous? Is it more the pace of the trend or an actual level?
We are looking at monetary conditions, which is the interest rate and the exchange rate, and these have to be appropriate for monetary policy.
When you look at, when you meet with, of course, some of your colleagues from other central banks, what do you most talk about?
So generally, of course, monetary policy, because this is our mandate, but of course also about the geopolitical situation.
So what, the reaction function, or the fact that central banks have to adapt to just more constant shocks?
So uncertainty generally is something that central banks have to work with and always had to work with. Uncertainty can be higher, it can be lower, but central banks have to adapt to this uncertainty.
President Schlegel, Switzerland is going to vote this year on whether it wants to impose a population cap at 10 million people. What would that do to inflation?
Oh, on political things, central bank independence is very important, and therefore I do not comment on political questions.
Even if you look at the models, I mean, it must filter through your models and the kind of impact it has on the economy longer term.
Oh, central banks, we are in the medium term. Interest rates, exchange rate are effective in the medium term, and these are more long-term questions that you are now talking about.
President Schlegel, thank you so much for joining us.
Thank you.
Thank you.